Yo, what's up traders? In this video, I'll be showing you how to use the Smart Sniper Entry Spike Detector 2.1 Pro. The tool designed specifically for boom and crash to help you catch clean spikes with ease. This indicator gives you sniper entry signals, so when price is likely to spike, it lets you know. On boom, we catch spikes going up, and on the crash, we catch spikes going down. It's simple. You see the signal, you enter, you manage your risk and secure your profit. There are two trade modes built into this indicator, the scalping mode and the low risk mode. So the scalping mode, this gives you faster signals, great for quick entries and quick profits. You'll get more signals, but some might be higher risk. It's perfect for traders who are in and out within a few candles. The low risk mode. This mode filters the signals more, so you only get the cleanest ones. Best for traders who want fewer but higher quality entries. It's slower but way more accurate. So when you receive the system, there should be four main indicators. The Smart Sniper Entry Spike Detector, the Smart Sniper Entry Trend Cloud, the Concealed FX Trend, and the Smart Sniper Entry Zones. For the installation guide, you should watch the video that was sent to you. Now let me get to explain the purpose of each indicator. So let me just show you what settings to use when you load the Smart Sniper Entry Spike Detector onto your charts. So as you can see, this is boom 500. Let me just drag onto the chart. As you can see, select the index that you're using. So if you're trading the boom, or let's say the boom index, just make sure that the boom option over here is selected. And as you can see, the type of spike detector signals. So there's two that you can use. The one is for the boom and the crash 300s, and the other is for the rest of the pairs. But if you're using the rest, you can just use the default settings. Then the signal type for the boom and the crash 500, 600, 900 or the thousands. There's two entry signals, so you have three options. You either use the aggressive, the second, or you can use both, but I would suggest that you only use the aggressive entry. Then as you can see, the support and resistance zones are included, so you can choose to show the zones or to hide the zones. It's totally up to you. And as you can see over here, the trade mode. Be scalping, you can select the scalping mode, or if you'll be using the low risk mode, you can just choose the low risk mode. Let me just show you how the scalping mode looks and how it works.
Smart power activated.
So as you can see, once you select the scalping mode, the Smart Sniper Entry Trend Cloud will be loaded along with the rest of the indicators. As you can see, the support and the resistance zones are loaded as well. So when you load your indicator, you're in the settings, just make sure that you chose the scalping mode. So I'll explain to you how the scalping mode works. As you can see, once you load the scalping mode, the Trend Cloud Smart Sniper Trend Cloud indicator is loaded onto your chart. So you can use it on the 1 or the 2 minute chart. As you can see on the boom indexes, we only take entries given by our spike detector when the trend cloud is blue. When it's red, we do not take entries. And as you can see on the crash indexes, we only take the entries when the trend cloud is red. Let me just show you. As you can see, our trend cloud is red over here. Spike detector gave two entry signals. It spiked right away, and as you can see, it's still going. So the rules are simple. Now let me show you an example of how the low risk mode looks like.
Smart power activated.
As you can see, once the low risk mode is enabled, the Concealed FX Magic Trend Indicator is loaded onto your chart, and the time frame that we use it is on the 5 minute. As you can see over here. So this is how the indicator works. We have an overbought level over here, up here, and we have an oversold level. So this indicator indicates whether the market is overbought or oversold. Now let me show you how you can use the scalping mode. As you can see over here, the rules for the boom indexes, you follow the trend cloud. So you can take the signals given by our spike detector when the trend cloud is blue. When it's red, we do not take the entries. So let me just show you an example of here. As you can see, our train cloud is blue. We got our entry signal from our spike detector, and as you can see, it went into the direction. So let's say you took the entry over here. What you can do is either you secure your profits, or you close after 5 candles. It's up to you. You can choose 5 or 7. And let me show you another example. When you enter the trade and our trend cloud changes from blue to red, you have an option to choose from 7 to 10 candles. You can use that as a stop loss if it doesn't spike. Here's an example on the crash pair. As you can see, our trend cloud is red. We got our entry from the spike detector. If you would have taken the signal, you hold your trades for 5 candles. As you can see, here's a great example of why I say so. As you can see, you entered over here, you held 5 candles, another spike occurred. If you held again another 5 more spikes, then you probably would have closed your trades over here. So you would have secured more profits than just closing trades once it spikes immediately. As you can see, you would have gotten another entry over here. You would have secured more, probably secure your profits around at this area. Because as you can see, there was 4 consecutive bullish candles. And usually what I suggest you do is keep it for 5 or for 7 candles. So here you would have made nice profits if you stick to those rules. As you can see, here's a clear example of why I say you should not take entries given by the spike detector when the trend cloud is blue on the crash charts. As you can see, the spike detector gave a signal over here and it did not spike. It went bullish in a bullish direction all the way. Every signal that was given by the spike detector, it did not spike. So just make sure that you follow the rules. The same on the boom indexes. As you can see, trend cloud is red over here. It gave signals, it did not spike. Some spiked, but only small spikes. But as you can see, this is a bearish move. So it indicates that you do not take the entries. Now let me explain how you can use the concealed FX magic indicator. The concealed FX magic indicator is a great tool for spotting reversals in the market, and it gives you the ability to know whether the market is overbought or oversold. There are 3 ways to use it. First, checking if the 30-minute is overbought or oversold, combined with the 5-minute overbought or oversold. This is considered a safer method. Then secondly, you check if the 5-minute is overbought or oversold. This is also considered as a safe method. Then last, when the spike detector gives a signal at the oversold or overbought level. So this method is risky, but it works. You can see this is on a 30-minute chart. So when we want to take entries given by the spike detector for the low risk mode, we first need to know where the market came from. Did it come from an overbought level or did it come from an oversold level? So as you can see, the trend indicator came from the oversold level. So this indicates that the market will now start looking for higher prices. So what this means is, let me just mark it out with the vertical line. So now that 30-minute comes from the oversold level, we just confirm on the 5-minute. Let me just show you. As you can see, our 30-minute came from the oversold, so now we also need to wait for the 5-minute to come from the oversold level. So as you can see, here's a clear example right over here. And as you can notice, the indicator, it does not move, it stays at that level. So I would suggest you make sure that the indicator does this as well on your side. And here's a few examples. Indicator came from the oversold level. We got an entry by a spike detector 0. Let's say there was less drawdown on the entry. It immediately spiked. You got 3 more signals. It spiked as well. Here you would have made good profits. Let's say 4 clear signals. And once it reached to the overbought level, you wait for it to get back to the oversold level again in order for you to take the entries. Let me just scroll through the chart and show you more examples. Over here is a clear example. We see that our trend indicator came from the oversold level. This indicates that we can now take entries by our spike detector, or we expect a reversal at this point. And right over there the reversal occurred and it went straight to our overbought level, but we did not get any entries by our spike detector. So let me show you an example on the crash pair. Once again the indicator reached the overbought level. Let me just mark it out with a vertical line over there. So now that it reached the overbought level, price will start looking for lower prices. So this is a confirmation that we can now take entries, but we first need to confirm on the 5-minute as well. Let me just check. Right over here we can also notice that the indicator also came from the overbought level on the 5-minute. So this indicates that we can now take the entries given by the spike detector. And as you can notice over here, we got our first signal and immediately it spiked into profits. So with this move down here, we would have caught 3 solid entry signals. The reason why I say 3, because once the indicator reaches the oversold level, I advise you to stop taking signals given by the spike detector again. You just wait for it to get back to the overbought level on the crash page again in order for you to take the entries. This will minimize your losses and gain you more profits in the long run. So now let me show you how to use the second method. With the first method, it is compulsory for the market to have reached oversold or overbought on the 30-minute. But sometimes this can take quite some time. But with this method, you only make use of the 5-minute chart to see if the indicator came from the overbought or oversold levels. This method is not as effective as the first method, but it works as well. Below is an example of how you can use it. But instead of using this example, I would just show you a live example. So here's a live example on the crash 1000 pair. As you can see, the trend indicator went to the overbought level right over here. So this indicates that we can now start to look for reversals. So we got our first signal over here. As you can see, it spiked immediately. You would have made profits, but if you held longer, you would have even gained more profits. We got our second signal over here. It didn't take long enough until it spiked, and as you can notice, it went massive. So it did it. We only got like 2 solid signals here, but it's enough for you to secure profits. It didn't get to the oversold level completely, but I would just suggest that you don't need to take all the signals. Just take a few. There's no need for you to be greedy. You don't need to take every signal. Just make sure that you at least catch 1 to 3 signals once this method occurs. That saves you from unnecessary losses, and you just need to know that the market will repeat itself again. Here's another example on the Boom 900 pair. Our indicator got to the oversold level. Here was our first signal, but as you can notice, here you would have taken a loss. But just because you took a loss doesn't mean you won't enter the next signal as well. And as you can notice, if you entered again over here, you would have recovered from that loss and made back your profits as well. We got more entries. Here we got an entry. We didn't get a spike. There was a small rejection, but if you closed in a small loss, you would have recovered again on the signal over here. Here you would have taken another. If you took your entry and you still held it, you would have made profits. So now let me explain to you how to use the third method. This method is the same as the second method, but with this you take your entry earlier. This doesn't occur every time, but when it occurs, you can take advantage of it. When a spike detector gives a signal and the concealed FX magic indicator is at the overbought or oversold level, you can execute your trades as we expect the market to reject that level. Now let me just show you a live example of how you can use it. So here's a live example on the Boom 900 pair. Once again, we see that our trend indicator got to the oversold level, and as you can notice, the spike detector also gave the entry as well. So what I would suggest you to do is Once this occurs, you enter after 3 candles. So let's just count 3 candles from the entry right over here. So if you entered over here and you held your trade, as you can see, it went into profits. So you would have made profits earlier. And the signals that were given afterwards, here you would have caught another entry. Here you would have taken made small profits. Here you might have taken a loss. But our indicator did not go to the overbought level yet. So you can still take entries when the spike detector gives you the signals. Here's a live example on the crash 1000p on how you can use this method. Once again, the indicator got to the overbought level. We got an entry from the spike detector over here. And what we should do is we enter after 3 candles. Now let's just count 3 candles after the entry. So you would have taken your entry over here. And as you can see, there was 0 drawdown. So you would have made good profits with only this entry over here. So that's how you can use the third method on the boom and the crash. Now let me explain to you how you should manage your risk. So now that you understand how to use the indicator, let me explain to you how you should manage your risk. Once again, our indicator came from the overbought level. Now we should start taking our entries. So if you use the second method, we would enter our trade over here. And I want you to keep a 3 to 4 candle stop loss. You should make sure that you check it on the 5-minute chart. So this means that it will be 3 to 4 5-minute candles. Stick to the stop loss. And as you can notice, you would have made a loss with this signal over here. And here you would have made your losses back with these signals over here. Plus you would have gained more profits. And just like that, once you took these 3 signals, overall you would have made profits, as the trend indicator also indicated that it's oversold. So now you don't take entries anymore. And you can also notice, if you didn't stick to those rules, here you would have made losses. So it's compulsory for you to follow the rules. So here's an example on the boom pair on how you can manage your risk. So as you can see, we got a total of 8 signals from the oversold level to the overbought. So with the first signal over here, if you kept with the 4 candle stop loss, you would have made profits immediately. The second signal, there was a small rejection, but if you closed immediately after the small spike, you wouldn't have made a loss. But with the third signal here, you would have hit your stop loss. But that's okay. Just follow your risk management plan, and as you can notice over here, the rest of the signals, if you just entered again and stick to those 4 candle stop loss, you would have made profits overall. So make sure that you stick to your risk management. You don't hold your trades too long, and you will see you will start making profits by using this indicator. And that's exactly how to use the Smart Sniper Entry Spike Detector 2.1 Pro on boom and crash. If this video helped you out, drop a like, make sure to comment if you're using the tool, and don't forget to subscribe for more clean trading tips. Catch you in the next. Persist FX signing out.